Today we analyze Johnson & Johnson stock, ticker symbol J&J. The current stock price is $163 per share and the current dividend yield is 2.73%. The revenue is growing in the past 6 years and the cost of sales and the operating expenses are growing naturally with the revenue. The debt to asset ratio in 2022 is 21%, a slight increase from 2021, but it's still a good debt level that doesn't worry me. And they easily can service their debt or pay the interest expense because they made about 105 times the interest expense in 2022. The company is buying back their shares, but very slowly. The graph here shows a big decrease over the years, but actually they only reduced the outstanding shares by about 3% in the past 6 years. Still a good thing even though they are not buying back so many shares. The dividend is increasing every year, and in 2022 the company distributed $4.45 per share, making the dividend yield 2.73%. Now we need to forecast 2023 numbers. In my opinion, we should use the research and development expense to the revenue ratio to forecast 2023 revenue. This ratio in 2022 was 6.13, which is the lowest in the past 6 years. The average for the past 3 years and the average for the past 5 years is 6.8. But to be conservative, I think we should decide that the ratio will be 6.25. So in my opinion, the revenue will be around $96 billion in 2023. The free cash flow to revenue ratio in 2022 is also the lowest in the past 6 years, so I will be using the same as 2022 ratio, using 2.73%, which is the dividend yield as a return on investment ratio. In my opinion, the intrinsic value of the stock is around $232 per share, making the stock undervalued by about 30%. But I also think that 2.73% is not enough, and I want 5% as a minimum and preferably 7% investment opportunities. So using a 5% return investment ratio will make the intrinsic value around $127 per share, making it overvalued by 29%. It seems that the market is using 3.9% return on investment because that will align with the current stock price. I want to address the worry about the decline in revenue due to the decline in demand to Covid-19 vaccine. When we look at the data provided in 2022 annual report about the sales of Covid-19 vaccine, we can see that the US sales for the vaccine went down by 81%, but most of the sales are internationally, and it grew by about 17.6%. So that would make the net decrease only 8.6%. And even if we suggest that the US sales for Covid-19 vaccine in 2023 went to zero, it will only mean losing $120 million in sales, which is almost nothing when you consider that the revenue in 2022 was $94 billion. The last thing I want to mention, I hope you consider subscribing to support this channel and encourage me to make more videos.